Global internet consumer group and one of the world's largest technology investors in the world, Prosus, saw a 32% increase in revenue for 6 months, ended the 30th of September, as the pandemic accelerated activity in the consumer internet space. In a year that's been tough for most businesses, Prosus's bets on sectors like e-commerce, food delivery, online education have paid off as people stuck at home aggressively adapted and adopted online models. In H1 of this year, the investor has seen 141% revenue growth in food delivery, a 70% growth in e-commerce and a 54% jump in edtech revenues as businesses pivoted from traditional to online learning. Prosus's India portfolio has also seen a vast improvement in fortunes. Food delivery platform Swiggy has steadily recovered post the lockdown and is now nearing pre-COVID sales levels. Prosus owns a 40% stake in Swiggy. EdTech sector's dream run continues. The market leader Baiju's has seen 180% growth. Eruditus has seen a 77% jump in course bookings, and Udemy reported a 425% increase in enrollments from individual users. According to data released by Prosus, the group that has invested $600 million across its businesses in the first half of 2021 prefers to be cautiously optimistic about its prospects as the longer-term economic impact of the crisis is still unclear, even as it continues to build on the shift to online triggered by the pandemic. Hello and welcome to Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shireen Bhan, and joining me on the special broadcast today is Bob Dijk, the CEO of Prosus and Naspers. Bob, many thanks for joining us here on Young Turks. And as I was pointing out, what a different world it is from the time that you and I last met in Davos, which was at the start of 2020. No one would have imagined that this would be the year and how it's panned out.
No, it's been indeed a tremendous change in life for, I guess, everybody around the globe. And I remember when we met there in the cold, we were just getting our first reports in from our business in China around COVID. We just started to think about it, and then a few months later, everybody was sitting at home and trying to survive in this completely new world. So it's been a very extreme year indeed.
Well, it has been a very volatile year and the uncertainty continues. But Bob, let's talk about this big acceleration to digital and this adoption of online. And that seems to be playing out well, at least as far as your portfolio companies are concerned, whether it's food delivery or edtech. But how much of this do you believe is sustainable? Do you believe that the kind of acceleration that we've seen, this sharp pace, exponential growth, how much of this you believe is likely to continue as we start to see some degree of normalcy return, whether it's getting back to work or, a vaccine on the anvil, etc.?
Yeah, no, it's an excellent question. I think what has happened, or at least what we've seen, is that if you look at the kind of business that we've invested in online business models that make people's structural needs, to satisfy people's structural needs, like the need to get food in their house, to get products in their house, to pay for things. And we always invested with a view that in the future, people would use more online methods to make their lives easier. And interestingly, what has happened because of COVID is that online future became closer, right? The future was pulled in by a number of years. And what we've seen specifically is that people were trying some of these services for the first time who have never tried it before. And people also use these services in use cases that they never tried before, right? So people may have ordered their first product from a company like Flipkart, or they made their first payments online while they previously paid in cash or otherwise. And what we see across the world is actually that people who've tried it actually like it. And in many cases, we actually looked, for example, what happened in the summer in Europe, where COVID cases went down very drastically. We've seen a lot of those new habits actually be structural. So people have tried these online services that haven't used it before. They use it for something else, and they say, "Hey, this works for me." And we actually see that a lot of that change in user behavior is sticky when COVID is on the decline.
Okay, so you believe that this is a structural shift that we are seeing towards online businesses because it's convenient, it's now easy to use, it's accessible, and it doesn't really cost the consumer anything. So you believe that this structural shift is here to stay. But Bob, because it's been easier for companies to acquire customers and easier for companies to retain customers, do you believe it's also brought in a forced financial discipline? It's forced companies to think harder about unit economics. It's forced companies to actually clean up their act when it comes to the financials.
Yeah, I think that's a mixed story. I think it depends really on which business you look at. I think what the main effect that I've seen across the world in just about every business is that once you get more volume into your business, your fixed cost obviously stays constant. And so the number of engineers you have, the number of basic costs has typically stayed fairly stable. And if volumes increased, then typically the unit economics have improved. And I think that happened almost everywhere. I think there were also definitely cases where lockdown forced people to think, okay, how do we survive, right? If this lasts for a long time, should we not tighten the belt? It happened in some cases, but in all cases, we've seen that effect for online models that got a lot more volume, and therefore the unit economics improved because of fixed costs were buttered out over more units.
So how do you see this playing out then, Bob? Because if you look at food tech or you look at ed tech, there are clear leaders across each of these categories. Do you believe that this is likely to be a winner-takes-all market? Do you see a significant amount of consolidation? Do you believe the big will get bigger? How do you see this emerging landscape in the next few years?
Yeah, I think if I look at the business that we have supported in India, for example, right, they were all local champions, right? So founded by Indian entrepreneurs and built something that I think is of impressive scale. I'm thinking about businesses like Dijk, but also Swiggy, in the past, businesses like GoIbibo, Flipkart. I think what I find an amazing accomplishment for Indian entrepreneurs is that they started these businesses from nothing and build them into something strong. And I think that's what we've done over the years, to find those great Indian entrepreneurs and back them for the long term. And I still see a lot of exciting new companies that we meet where I say, wow, this will be the future. So I think actually, particularly in a market like India, where there's so much talent and entrepreneurship, I think there's a lot of value that's going to be created by new companies. Like we've invested in businesses like Misho, which I think is a tremendous new model that I think can be very big in e-commerce. And I generally think if I look at places like China, competition is not going to go away. And I think there's more innovation and more entrepreneurship. And I think that's good for India and good for us.
Yes, it certainly is good for you. You spoke about exciting new companies. You brought up Misho as one of your portfolio companies, which has an exciting story to tell. Outside of these spaces where you're already invested in the Swiggys and the Baijus, the Mishos, where do you believe this online shift is going to open up new opportunities that you may want to invest in?
Yeah, so the opportunity space, I think, is really broad, and I think I mentioned it earlier, but India is our top priority country when it comes to new venture investments as well. So we definitely look at areas that are new to us as a group in India, because we think the market is really attractive, and the entrepreneurs are some of the best that we meet. Where do we see real opportunity? I think most of our investments, sort of the larger investments, will typically be in the space that you know about, right? So food delivery, ed tech will be big for us. Online payments will continue to be an important area for us. But we're also, for example, building out our offering in car classifieds, and in India in particular. So we used to have OLX, for example, mainly done a website to trade anything, basically, but it's become really strong in cars. And now on the back of that, we actually want to make that whole journey of selling a car in India much simpler for people. And we're sort of building out inspection centers for people to get a certification to even buy cars of people if they don't want to go to the trouble of selling it themselves. So I think there's also a lot of potential growth in these business models that span online and offline. Because I think that historically, internet models were very much on just online, but increasingly the offline world is a big part of it and needs to be simplified for people and needs to be streamlined.
Okay, so that's car classified, online car sales. That's the big opportunity that you're looking at. But Bob, since you said that India is your top priority market, you believe in the entrepreneurship of young Indian startups. What is that then going to mean in terms of future investments? What kind of money are we talking about? And how would you like to allocate that across these different verticals? Will EdTech continue to take up a bulk of the investments?
Yeah, it's hard to look in the future. Right? In the past, if I look at the last, 5-6 years, we spend more money in India than in any other location, as far as I know. So many billions of dollars went into India just based on the opportunities that we've seen. And if anything, I'm more optimistic now than I was 5 years ago about opportunities in India. So I still think India will be our #1 investment destination, frankly, in the next few years. And in terms of sort of where will the money go, I think we typically, if you look at how we invest, most of our dollars go into businesses we understand well, and that will be the ones that we talked about earlier. So we may actually put investments into things that are new to us, particularly if we get excited. And India has shown many of those kind of opportunities, but the bulk of it is probably going to go to those core segments that we talked about.